The typical profile is of a very privileged, elite university graduate that are from many backgrounds, even though that the majority are Euro-American. But you have Asian Americans, you have Latinos, you have African Americans as well. But also as you get higher up in the echelon of Wall Street, the less diverse it gets. In terms of women and men, there are, at the lower levels, there are about 50-50 women and men. And obviously as you increase, given that the environment is rampant with a lot of race and sex discrimination and class discrimination, there are there's less and less diversity as you go higher up in the ranks. The institutions that they pull from are about 5 to 10 of the most elite universities in the U.S. So most of Wall Street recruits are from Harvard and Princeton, Wharton, some of the other Ivy Leagues, and other comparable institutions such as MIT and Stanford. And what their strategy is in doing that is to say that we are recruiting the best and the brightest, right? The most privileged people on the globe, that they often say. And part of that is to give them a kind of pedigree so that it legitimates what they do in terms of the markets. They don't have that much real-world experience, right? And yet they're being charged with the futures of corporate America, with investment management. So certainly one could argue that it's their pedigrees that they're after, not necessarily their smartness, right, with regard to finance. Their culture has been central to this crisis precisely because Wall Street investment bankers' culture of liquidity favors rampant job insecurity, right? Investment bankers are in constant threat of losing their own jobs. At the same time, they're incredibly highly compensated, not only by salary, but by their bonus. And their bonus is not dependent on the long-term strategy and the long-term performance of their corporate clients. It's actually dependent on how many deals that they're actually able to pull through. They push, for example, these subprime mortgages through, where many of these mortgages don't have long-term sustainability. And yet they know that if they make their profits this year, they get a really high bonus and they might be out of their job anyway, right? So their kind of culture is crisis invoking and crisis producing. I wasn't, and AIG, which is an insurance company, and part of what's going on is that the Glass-Steagall Act was dismantled in the late 1990s, and what that means is that insurance companies, which for most of the 20th century were actually prevented from gambling and speculating in the financial markets, actually now are. Right, and that's the point of what all the press is about governmental deregulation, is that those institutions that used to be protected from the risky capital markets are now knee-deep in it. In particular, what happened with AIG and the bonuses is that many of the bonuses actually went to AIG's financial wing, its financial derivative wing, right? And these are precisely the people who absorbed the culture of Wall Street. Right, many of the bankers and the traders in their financial derivatives wing are Wall Street produced, right, are Wall Street grown. And they brought them in order to generate these kinds of record profits that they were seeing through the subprime market. And so what they were doing at AIG in this particular wing was issuing and inventing and promoting and selling these credit default swaps. In the past 30 years, so much of the fortunes, right, and the benefits and the security of many Americans have been outsourced to the stock markets, to the financial markets. And so many of us, even though we might disagree with what Wall Street is doing, even though we might have a critique of Wall Street, our retirement plans or our savings or our children's college education is tied to the stock market. So in many ways, Wall Street is holding the stock market hostage, right, as a way to say we actually need to be bailed out, right, and any kind of recovery needs to come through us. And so because of that complicity that both Americans at large as well as the government have in Wall Street succeeding, our critiques might not actually have that much bite in it. Now, the danger is that Wall Street gets bailed out and we don't dismantle the kind of bubble culture that got us into this mess in the first place.